Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. And most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And what do I mean by this? I mean, I only speak to transportation professionals on this show, as well as my twice-a-week long-form podcast, because I want to put the right information out there from the people who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take all of that, apply it, utilize it, and see a meaningful difference in your business and your life. It's one of the many, many reasons why I proudly fly this American flag behind me every single day. A, we're the greatest nation on earth, but B, I'm living my American dream, and I want to help each and every one of you live yours as well. Solo show today. That's what we got going on. We got a solo show today. And then we also will have guests on Wednesday and Thursday this week. And then Fridays, you guys, and it is, let me see here. Friday is Q&A day as always, you guys. So with that being said, if you have any questions you want answered on the show, drop them in my DM, and I'll answer them live on the show, or drop them in the chat and we can do it there. But before we go any further, as always, you guys are going to give a shout out to my friends over at VHub, vhubapp.com. Whether you're a broker, carrier, or a shipper, we all need access to trailers, and we all enjoy making money as well on top of that, you guys, because what you get with this is you can go on their platform, you can find their trailers that they have for repositions, you get paid to move those trailers, and then that's on top of the revenue that you can get by loading those trailers out. You can get on there and create a drop trailer pool. What they're working on right now, you guys, is they have a couple of roll-up door, 48-foot roll-up door dry vans out in San Diego, needing to go to Maquoketa, Iowa, and they pay $1,800 per trailer, you guys. They also have a drive-in in San Diego. This is a 53-foot swing door. Needing to go to Mount Crawford, Virginia, and get $1,530 to do that. And then also they have three of them actually in Evansville, Wisconsin, going to Mississauga, Ontario, paying $500 US to do that, you guys. So hit them up, vhubapp.com. My man Zach Lonergan and Stacy Steen, they will be in the audience. Just do me a favor and let them know that the Freight Coach sent you. Tracy St. Clair, good morning to you watching over on YouTube. Sonny Sharma, good Tuesday morning. Orange black shirt gang, let's go. That's right, man. I got to switch it up, man. I got the Freight Coach Logistics polos, the person who supplied all that stuff. They only had them in black, but don't worry, it will be changed to orange because I got to go with that color coordination as always. Bill McIntyre, great morning to you as well. Zach Lonergan, see, he's here. You guys, I already told you that. Good morning, Freight Crew, he says. Catherine Whitehouse, good morning. Ashley Fountain, good morning. Thank you guys all for tuning in on this glorious Tuesday morning in freight, coming off of that holiday weekend there, as I'm sure you guys all went out and enjoyed your time. Corey Buchan, what is up, brother? Thank you for tuning in. Good morning to you as well. Yeah, you guys, we're, some good articles broke last night that we're going to be, or not last night, but just some relevant topics that we're going to be speaking on here. Let me see here also. Yeah, if you're out there getting stuff done in the freight universe, you guys, I'm out there as well, making those cold solicitations and all of that fun stuff. I got rejected this morning as well. So I just want to throw that out there that it happens to everybody. And I also sent even more outreaches after that as well, because you know what? You got to take the good with the bad. And frankly, that's all you can do with this, you guys. And you got to keep showing up. You got to keep putting in your outreaches. And it's a numbers game. It's a volume game. The more people you reach out to, the closer you're going to come to getting the results that you really want, you guys, because it takes time. It takes a lot of effort to get out there and get in front of as many people as possible to get yourself noticed, right? And I think that and I know I've been talking about this a lot lately, but I see all the posts out there on social media about when's it going to get easier, right? Like when's the market going to shift? When's it going to get easier? Everything else under the sun. And I think like you literally just got to focus on what it is that you're doing, right? How can you improve your outputs? How can you, change up everything, right? Like everybody in the state of Arizona here, for example, I'm offering just to meet them in person. I want them to see that I'm a real human being, to be able to feel how much I care about their business. And again, I'm willing to do what other people aren't, right? Like a lot of people want to sit there and be like, oh, I want to come up and just DM them and just email people and leave it at that, or maybe even cold call them. I want to meet these individuals in person. I want to see the facilities that my drivers are picking up at or delivering at. I want to see that. I want to see that operation. I want to see like, hey, what more information can we get to make this a more seamless process, right? Because I think everybody always focuses on the end result. Everybody thinks like, oh, it'll all be great when I get the business. And, that helps a lot. But like, what can you do in that build up phase, in that process, to show that you're a little bit different, right? I'm reading a really good book right now. I forget the name of it, but it's like the 22 Laws of Marketing or something like that. And it, again, it further reiterates that niche, right? And it talks about some very, very successful companies that are out there. You've all heard of Coca-Cola and Anheuser-Busch and Miller Lite and all of those famous brands that are out there. And what's funny is it talks about how some of these companies pivoted away from what they were good at, and why it actually hurt their main organization, like their main product, right? Like with the sales and everything. And to me, I always talk about the niche and specializing in the niche. And my man Cody Kaler just jumped in, and they're all about produce, right? That's what their jam is. Just like with me, we're all about open deck and heavy haul. And yeah, there's a little bit of bleed over some dry van freight, but again, like it's about that niche. I'm selling on my experience. And in this book in particular, they talk about specific examples about how people lost market share from their industry leading product that they had, because they tried to get out into other areas, and they kind of walked away from their specialization. So it's a very interesting read, and there's a lot of parallels to this industry, and we've all heard that saying, the jack of all trades and a master of none. That's very, very applicable to this industry, and especially right now. And I really think the way it's going to be in this industry for quite some time. I don't think that individuals want to hear that everybody's good at everything and can be the best at everything. They want those niche-based subject matter experts that are out there, and they want to partner with them, and they want to work with them on their freight, because it brings that level of comfort to them, knowing that the person that they're having on these shipments knows what they're talking about, knows what they're doing. So I think, like, for me personally, that's the route I'm going to continue to take in our business. And yeah, we'll go with that, and we'll run with that, you guys. So again, holidays, and I saw this, I think Brent Orsuga posted this yesterday about that 1-day contract and everything. And then, and then I think Ed Milet posted something again about like this week, for example, like these are separator weeks, about the holiday weeks. And I don't want to sit here and take any credit for that saying, but it's like, man, so many people, again, I'm not here to judge anybody on what they do on their weekends and their time off and all of that stuff. But like, think of how many people are coming in today hungover or sluggish because they didn't do shit all weekend. They're not going to make their outreaches today. And then, they're going to be mentally checked out Thursday evening because it's a short work week and they're already going to be thinking about the weekend. Think about how much you're going to be able to separate yourself from everybody this week, right? If you're out there and you're hitting the ground hot, you're hitting the ground running, sprinting out those fucking doors, it's going to be a good week. These are those separators. And again, I'm bringing it up. I'm not taking credit from what other individuals that I follow out there say. And that one came from Ed Milet, and talking about that in the separators. And then Brent Orsuga posted yesterday about those 1-day contracts. Are you coming in, and are you maximizing that time? So good morning, Byron. Thanks for tuning in as always. I hope that's not you, Sonny. I hope that's not you saying you're sick, but I know what you mean in that one, man. But let's get into some articles. No, the coffee is good this morning, Byron. It's a Black Rifle Coffee Company. I got their coffee club subscription. I need more of it. All right. First article we are breaking down today is from my friend Eric Johnson over at the JOC. If you guys don't follow Eric Johnson, you really should. He's one of the best out there in the industry. And I would definitely follow him. He had just put a nice post out there this morning about he just hit his 20-year mark in the industry. And it's good. I really enjoy his writing and everything. Appreciate that. Appreciate you for tuning in. Says, love that hustle, brother. And JOC, tactical M&A activity likely to surface is under pressure in the U.S. 3PL market. Yeah, I'm right there with you there, Ashley. Blackbeard's Delight is very good. I like their original, like Just Black, and I also get their hazelnut blend and their vanilla blend because I'm a pinkies up kind of bougie guy when it comes to my coffee. And mainly because my wife prefers those blends. So I just kind of drink those as well. But anyways, I don't put creamer or anything in there. I just drink my coffee black. Back to the article. Elevated interest rates and low freight rates are pushing the U.S. logistics market into an opportunistic phase of mergers and acquisition activities. But for shippers, deals where one service provider buys another are of more consequences than deals where a company's owner merely changes hands between private equity firms. Having new investors can help a shipper feel more efficient, feel more confident about a third-party business and that it's looking to grow or invest in technology, said Mark Iampieri, a partner and managing director of Alex Partners, who leads the firm's North American transportation business. If there are no fundamental operational changes announced, that's good for a shipper. The contrast in deals being made was symbolized by Ascent Global Logistics, a freight broker specializing in expedited shipments, being acquired by a new private equity firm 2 weeks after Forward Air acquired one of its customers, Forwarder Omni Logistics. The latter deal is one that could have a material impact on shipper customers of the two companies. If I'm a shipper, the most important thing is I want communication about what to expect in the change. In general, about deals involving a merger of two operators, the key is ask if the company that relies on either provider or are they transactional at best. The more core they are, the more important it is to have that dialogue. And I think it's very important to talk about that right now. Is if you're out there, let me see here. If you're out there and switching reps, I would even say it's even goes as far as switching reps, and how you handle that is so key, right? Like if somebody leaves an organization or they're transferring the account because they got promoted or whatever that is, are you contacting your customers and walking them through the transition and everything? And are you working with your internal team about ensuring that there is a smooth transition with that? I think a lot of people kind of pass that along as like, hey, I'm not dealing with this account anymore. I'm going to just give it to somebody else. It's, out of sight, out of mind. And it's their product or their problem now. And I think, the same thing about talking about that, like that's everything, right? And I almost wonder, and they might get to it. And again, I don't read all these articles ahead of time, you guys, but I almost wonder how much business is lost during an acquisition like that. And if there is a way to track that information, because that will, again, like these are real situations that people need to learn from and how they handle this stuff. And then it goes into cashing in. Outside of the direct impact to customers, there's a larger question of what the freight and financial environment means to domestic logistic services industries fragmented out there by mode, region, and type of services. Ascent Sail, for instance, was an example of its previous owner, Elliott Investment Management, capitalizing on the company's growth in the expedited freight service market and its new buyer wanting exposure to that sector. This was about taking meaningful chips off the table for Elliott at a time when Ascent had performed well, said Chris Wofford, a managing partner at Wofford Advisors. The expedited market is a premium price market. It's admittedly more volatile, but customer relationships are very sticky, and that makes it highly attractive. In that situation, the sale was not just opportunistic based on Ascent's performance during the pandemic after it spun off from the LTL carrier Roadrunner Transportation, but also about the natural cycle of the 3PLs changing hands. There are more likely to come in that area, such as holding companies with access to debt, making moves to attractive purchases out there. And then Wofford said that strategic investors could make long-term defining investments in the market. Generally speaking, with private equity somewhat sidelines, it's a good time for strategic investors. With rising interest rates and banks not lending much, private equity buyers are less competitive on purchase prices right now. And then going on debt as a harder sell. If you're a 3PL that had high margins and great revenue, but now have margins compression and are seeing volume outputs, it'll be tougher to get financing. It's a freight recession, he said, for companies to think in decades, not in quarters. This is a good time to buy an asset for less than the book value. I think, okay, this was a great article, but I don't think the mergers game is anywhere near being done. I think that the whole yellow situation gets filtered through and split up and sold off into a billion parts or however that looks. I think you're going to see a lot more M&A activity. I mean, obviously, you saw the article break about Convoy looking into a strategic sale, raising capital. I think right now, unless you have rock solid actual profit instead of revenue, just pointing that out there, that there's a big difference between revenue and profit. And I think that is coming to light right now. But again, I think that if you're in the market to buy a company, I think right now and probably even next year is going to be a great opportunity. I really, really do. And you might even find some people who are just so sick and tired of it. They're just looking to get out of the business, and they might, I don't know, who knows? They might do a private financing sale. I've learned a lot about that because, like, I studied I don't want to say a decent amount, but I've been studying the whole M&A game, and maybe I'll have some of my friends who are in the mergers space come on and talk about this. And I personally think it's fascinating because I watched a podcast, or I listened to a podcast. And if you don't follow Andy Frisella, the Real AF podcast, follow and listen to that. I listen to his show all the time, all of his different formats that are in there. There's a lot of valuable information, but he had a lady by the name of Cody Sanchez on there, and she was talking about, because that's what she does. And she was talking about like owner financing, right? Like, you can literally acquire a business now with no money down. And it's just because the owner is just looking to get out and retire, and they're willing to finance it and everything. And I personally think that there's going to be some businesses that are like that. Now, granted, they're probably not on the large scale, but hell, if you're looking to get in and acquire something, now might be the time to get in there and do that. So look into that. Again, I'm going to reach out to some of my friends who are in the M&A space and see if they'd be willing to come on and talk about that. But that article, you guys, is tactical M&A activity likely to surface in under pressure 3PL market, from the JOC and my good friend Eric Johnson. I like it, Byron. Keep speaking your mind. Keep it real. I appreciate the realness. Raquel, what is up? Happy Tuesday to you. Let's go. Raquel's tuning in over on YouTube. Follow Raquel as well, you guys. She released a book. She's been a longtime supporter of the show. I like seeing her and her business succeed and everything out there. It's great to see you, Raquel. Let's see here. Next article we are going to get into, you guys. This is another one that I don't think is getting enough attention. And Byron, dude, I'm serious. I'm serious about this, man. She has a very successful business, or she's been doing that a lot, and it's the no money down to the acquisition. It's wild. I thought it was too good to be true as well. I listened to the episode, and then I went out there and looked into it, man, and it's a very real thing. It's a very real thing. This is another topic that I don't think is getting enough attention. We've been talking about it on the show just briefly, but I found this article about it, and it's from ttnews.com, and it's the Panama Canal congestion threatens U.S. trucking in a delicately balanced supply chain. One thing goes out of whack a little bit, it can throw the whole system into chaos. Panama Canal officials say limiting how many ships can go through the waterway could have downstream effects on U.S. trucking, like slowdowns and bottlenecks. And then we are also going into the Panama Canal Authority, implemented those restrictions in response to a drought that caused canal water levels at one of its major locks, lower levels at one of the locks along the canal. But those limits have caused a backlog of ships either having to wait or find longer routes around. And then it goes on to say that our supply chain is very delicately balanced. And that is coming from Danny Ramon, an intelligence and response manager at Overhaul. If one thing goes out of whack, it can throw the whole system into chaos. The Canal Authority's data shows nearly 3% of all global maritime transits goes through the canal, and the United States is the main source of traffic, with close to 72% of cargo passing through the canal, either originating from or arriving at U.S. ports. That accounts for 215 million long tons in 2022. If we block up a major artery of international freight commerce, it's going to have downstream effects. When we look specifically at U.S. trucking, once there's a choke point at the canal, and it means that the choke points are just going to end up moving down that line. TD Cowen has been monitoring those conditions, and while shipping data indicates a pileup of ships waiting at the ends of the waterway, reports suggest that container ships have not been materially impacted in the U.S. East Coast and Gulf ports, said Jason Seidel, who's an analyst over there. Potential impacts to ocean container rates will hinge on whether the reservoir replenishment through ocean carriers are able to divert this bottleneck via the Suez Canal at the expense of an extra week of travel. Forkites noted in a report that canal congestion could mean less volume being diverted to East Coast ports. Our belief is that the port throughput on the West Coast is in a really good state now because the overall demand is soft. So if this were to happen a year ago, then would it be just as exacerbated? I personally think that, he goes on to say, Christian Sir said there is no real issue for container vessels, but since the authority has said there's going to be operating under limited draft in a number of transfer dates and in another 10 months, there could be some conditional delays. There's not so much volume moving, and that ways to get to the East Coast that is out there. But again, I think like this is a very, very real thing. It's saying that right now because they're still able to process everything and there is an alternative route. But the beginning of this article kind of put it out there. This is all as it's operating perfect, like weather can happen, things can happen. If there's any other delays, if anything happens at any of the ports, it could lead to a lot of issues. But to me personally, with the ports out west being down on volume, this is just going to reroute some of that. And I'm sure they've already started doing that, right? Like a lot of these companies, I'm sure have already started rerouting some of these vessels and getting them out to the West Coast. But again, that is like any of these little things can help freight volumes, right? And then this is like, I hate the term disruption, but that means that there's going to be some good things that come about that, if the freight shifts in any capacity and any quote unquote disruption that's out there in the market, could be a benefit. Yes, there is a backup of those ships out there. That means that freight isn't going to get to its destination in a timely manner, but the rerouting of those ships, say if they're like, hey, we're going to start moving this to LA Long Beach as opposed to Houston, going to have some market effects out there. So start paying attention to this. I think that it's a lot bigger than it's getting attention right now. So again, that article is from ttnews.com, and it's talking about the Panama Canal and its threat to the U.S. trucking industry. Raquel says, I've already seen a slowdown in containers to inbound to the U.S. If we all remember, yeah, exactly. That was that little thing that blocked the market, or blocked that out there in the canal out there. All right, third and final article, freightwaves.com, a freight market turnaround in 2024, question mark. Tender rejection data shows that the freight market bottomed in May. Since then, conditions for carriers have been improving. there's out there. Data comes from the tender messages between shippers and motor carriers. Tender messages are requests for truckload capacity by shippers in the contract freight market. A tender rejection by a carrier tells the shipper that the carrier has another option for its truck. Higher rejection rates mean that supply and demand balance is swinging in the favor of the fleets. Current tender rejection data signals a stronger quarter year over year for motor carriers. Tender rejections are on pace to surpass last year's number and should do so by the end of Q3. And then tender rejections are also signaling that the current market is similar to 2019. Who wins? The waterfall theory of freight suggests the largest carriers are the last to be impacted by a slowdown and the first to see the market come back. The waterfall theory of freight is at the foundational that the tender rejection data is designed to monitor. As shown in the chart above, volumes have continued to strengthen throughout the year, and this suggests that the trucking market could see a decent peak season, providing some relief for motor carriers. Even though conditions are improving, there is still overcapacity in the marketplace, and the situation could continue to correct itself over the next several months. And that also shows a part that the trucking firms in the market, the chart is measuring the market. All right, I'm just kind of skipping through some of this stuff. And also, I always wanted to know this about tender rejections. Does it count every rejection in in that waterfall, right? Because I've been involved in some RFPs and some contracted customers where there's 10 people on that waterfall. And if all 10 people reject that load, is that 10 tender rejections or is it counted as one? I'm genuinely curious about that. Because I've been talking about on the show for the last couple of weeks, I'm starting to see an uptick in spot market activity from some of my contracted customers. The spread between contract and spot rates as the freight market comes out of their doldrums, shippers may pay higher prices for freight in 2024. However, the next stage of the freight cycle might be much harder on freight brokerages than shippers. Many shippers have started to prefer asset-based carriers. Customers have always preferred asset-based carriers over brokers in their routing guides. Always. You're not going to convince me any differently in that. But lower volumes mean lower revenue for brokers. However, brokers also make their money on the spread, the delta between contract and spot. And then currently the spread is at 79 cents. Meaning that it's 79 cents cheaper per mile net of fuel to move a truckload of freight using a carrier from the spot market than it is via contract. While the spread has narrowed, it's still near a record level. And then it goes on to say trouble ahead for brokerages. This means that freight brokers with freight committed in the contracted market will see their margins squeezed. That could lead to some of the high growth brokerages that financed their growth through debt in a near 0% interest rate fail. These brokers tied to their debt covenants to margins, and it goes on to talk about some of the other brokerages that filed for bankruptcy out there. And then it goes on to say that conditions for the carriers could improve by Q2 of 2024. It's going to be interesting to see. I personally think, again, I've been very vocal about when and how I think that the market recovers. I've also stated here as of late, start paying attention to social media because you're going to see all of these brokers start crying about relationships again because they never took any of this time to invest in relationship. I'm not saying everybody. I'm just saying that the people that I see posting all the time about the market will be the first ones to complain about how carriers need to focus on relationships when they're not focusing on relationships right now. So if you're in this position where you got some contract freight, or you know what, you've been using a couple of carriers, not repeatedly, invest in that right now, you guys, because I am pretty much on par that, the market's going to start, the recovery's already started. It just doesn't look like it, right? It's going to really become noticeable. You're going to see more volume pump through for the peak season this year. My man Shannon Breen with Freight Vana was talking about that this morning. And then you're going to see that dip in Q1, and then that market recovery, I think, is going to be coming out the gates full force here. But again, you're already starting to see it. I'm starting to see it in my book of business. I'm starting to see the opportunities present themselves a lot more. But again, invest in those carrier partnerships right now. All right. Because it's going to be here sooner than you think. And I don't want to see anybody crying about how people are raising their rates. Maybe you should preemptively raise the prices that you're paying them right now, because in time, that freight's got to go somewhere. And who's it going to go to? So that's going to be it for today, you guys. As always, we'll be back tomorrow. We got guests on tomorrow and Thursday. If you got value in what you heard, subscribe to the show, you guys. Rank the, get it out there on social media to your friends. Spread it out there to your network, because if you see value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.